Welcome back to another video. Today I'll be speaking about a simple ICT strategy which you can use when you see it form, okay? It's not something that you may see a lot, but when you do see it, it's just good to know because you'll see it and you'll be aware of it, okay? Essentially. The strategy and example I'm actually going to be showing you guys is from a trade I took today. So a lot of gems will be shared, so take notes, okay? Let's get straight into it now. Firstly, I'm going to start off in the weekly time frame just to share with you guys why my overall bias was why it was, okay? And essentially we had this weekly fair value gap. We had this weekly fair value gap which was actually traded within for about 2 weeks. However, just look at the bodies of these two candles, okay? These 2 weeks. It's showing that this fair value gap is getting respected, okay? So I now believe that we may go up because of this. Not just because of this, we've also got some lower time frame confirmations, okay? And yeah, that's literally it. The bodies of these candles respect this fair value gap, and I expect it to go up. Also, I'm not going to be showing you guys here, but on the dollar index, I'm overall bearish. I've got a lot of confluences on the dollar index on why I'm bearish. We've reached into a premium fair value gap and then rejected down. So we've respected that fair value gap and we started to come down. Obviously, you can go in your own charts and check this. And I don't want to go in detail, but yeah, we created a market structure shift on the 4 hour too. But yeah, let's not get off track. So we had this weekly fair value gap and price respecting it, okay? Let's go down to the daily time frame. So obviously this is just our weekly fair value gap. Okay, so what can you see on the daily? Well, you can see there's another fair value gap over here. Okay, now this is the daily fair value gap. Price came into here for 2 days, and then what happened? We respected this fair value gap. Look at the bodies, and then price started to move away. Okay, that's shown a lot, and we've got this huge displacement move. Okay, now this isn't enough. Okay, but what is enough is the dollar index correlation, okay? The dollar index correlation. Got a lot of confirmation there. I'm just going to be speaking about a lot of the technicals on why I took this trade, okay? And then what can we see here? So we had this big displacement move, this big push up. And essentially what I wanted price to do is come at least to 50% or below 50%, okay? And we also had this fair value gap here, but I'm not going to draw that out now. So I want the price to come to this 50% level. Some people draw this range differently. Some people draw it from this low to this high. However, if you can see, below 50%, below the 0.5 level, is this fair value gap, okay? However, let me draw your attention to something else. We have here a old fair value gap, which gets traded right through, okay? Which gets traded right through. So this becomes a inverse fair value gap, and when price comes into here, it becomes a BPR. BPR, a balanced price range, okay? So my attention was here. Because price ripped through it, I still expect price to come here and balance this price range, okay? Because it's not balanced, okay? Only buys were offered here and only sellers were offered here, okay? Now what can I do with this information? Well, I'll go down to the lower time frame, okay? I'll go down to the low time frame and look for a confirmation, okay? So go down to the 15-minute. I know also, forgot to mention, also this BPR over here, this inverse fair value gap, is below 50%, okay? Is below the 0.5 level. So yeah. So go down to the 15-minute time frame. We can see that London, 2 to 5 a.m. London actually came down into this balanced price range, and we traded a bit below it too, okay? Now, this is already adding confirmation. I know London usually creates the opposing end of the daily range, okay? The opposing end of the daily range. So I know that here is the low of the day, is the low of London, that price may actually go up to now sweep what? Buy side liquidity, because we've already swept sell side liquidity here. So what price may actually do is go up to sweep buy side. Okay, now how do I look for confirmation? So once we're in this balanced price range and we've swept this liquidity here, this low, I want to look for a market structure shift. Now I'll go down to the lower time frame, and it's a bit choppy, so I want to go to something much more cleaner. So the 3-minute time frame. Let's check. Okay, cool. If we check the 3-minute time frame, we had over here a 3-minute market structure shift. Okay, market structure shift here. Okay, and then what do we have after this market structure shift? We had this displacement move with a fair value gap before it. Okay, now this could have been first entry, this could have been the original entry. Okay, and then you could have held until here, whatever. Okay, but let me just put this back a bit. So obviously price starts to move up, whatever, and then essentially what I want is, because I'm trading outside of a kill zone, so I'm trading outside of London kill zone, I'm trading outside of New York kill zone, what I want is extra confirmation. Okay, so this trade already looks clean to me because we've got a balanced price range. We've now balanced the price range. We've came below into a discount in below 50% on the 4-hour range, and we've got a market structure shift also with here break of structure. Okay, so we've also got a break of structure here. Okay, so a break of structure is essentially just a continuation, right? Just a continuation. And obviously here was that low that got taken for this high, and obviously we had this break in this fractal high, this swing high that created this low. Price came back into this fair value gap and started moving up. Now we've got this break of structure. What I want to enter off of is a fair value gap. Where's the fair value gap? Cool, we've got one here. Now where's my entry going to be? My entry is going to be here. It's going to be a low risk play. My stop loss is going to be below here because I'm actually targeting a lot, very high, and my original TP was actually these highs over here. However, because one of my challenge accounts actually reached a profit target. Okay, it actually reached a profit target, so I manually closed my trade. Obviously all the trade executions and proof I will show you at the end of this video, or you can check my Telegram, link in my description. And yeah, let's see how this trade goes. So that's our entry, stop loss. Obviously that's where I took my trade out. And obviously let's just see what price does. This is a bit slow. Let me just put it to 10 times speed. So obviously we're getting this nice displacement move. Obviously we entered outside of kill zone, however it looked very clean to me. We've got extra confirmations, etc. And yeah, just spread this bit out. As you can see, we actually smash take profit at 6.2R. Okay, TP at 6.2R. Obviously I manually closed it, and I do think we could see higher prices, but this trade was a swing trade. Okay, low risk, a swing trade. It was meant to be a swing trade, however I just closed it manually. Okay, and if you can actually see that the bulk of the move actually started in what? New York kill zone. Okay, do you see how it's all coming together now? The bulk of this move actually happened in New York. Okay, so we had London, which actually manipulated the actual day, and we had the actual expansion move of New York. Okay, and yeah, I hope this was insightful. I hope you learned something from this, and make sure you join my public trading Telegram channel in the description below. The link will be there. Make sure you follow my Instagram. The link would also be in the description below. And also, I've also got my mentorship link in the description below. I've only got a few spaces left. I'm only going to be taking on a set amount of people. And yeah, until next time, take care.